we all know that, Ps were probably close to an all-time high. I believe that what we're seeing today is readjustments which I think occur at times of volatility and uncertainty. If I look at the European market, where the economic rebound is lagging a little bit behind the US, I see their equity markets doing pretty well, and maybe there is a bit more room for upside over the next few weeks as the vaccination process seems to be going on a better trend.
Okay, let's stick with that then, Johnny, because you have a retail bank, you have an investment bank, you have commercial banking and trading. The U.S. is ahead of Europe in vaccination rates, but Europe has started to see some signs of life in both vaccination and the economy. Do you, from where you sit, see any direct connection between economic activity and vaccination rates?
It's a great point, Brian. It's early on. However, data is quite promising here. I would say vaccination is one of the many factors that is leading to reopening. But to your point, if we want to try to see a connection, I think there is. If you look at the United States, where vaccination is going well, vaccinating around 2 million to 3 million Americans a day, expectation for GDP growth in 2021 annualized is around 7%. If you look at Europe, take the UK, where vaccination has been quite effective there. Expectation for GDP growth is around 6%. And Europe is lagging, but vaccination process is better. We're now expecting a GDP growth around 4%. And I do believe there is some connectivity between the two, but I think time will tell.
Prices running hot, inflation, suddenly the word of the week. It's hitting the equity markets, Jean-Yves, here. We're starting to see prices tick up in Europe as well. You have a massive fixed income division. A lot of debate about the Fed. Is the Federal Reserve here doing too much? Does it need to pull back? And is maybe the European Central Bank not doing enough? How do you see central bankers both here and in Europe doing their respective jobs?
It's another excellent point, and you have an excellent view of the transatlantic dimension here. Same thing, it's very early on. I don't think we've ever seen, global economies being stopped the way they were and just, rebounding massively the way they are today. Then what I can share here is, as you said, having a retail activity, wholesale activity. What I've seen is without the Fed intervention, liquidity injections, government programs, accommodative monetary policies on both sides, by the way. I don't think we would have benefited from, the capital markets we've benefited here and in Europe. And it's been a massive stabilizer for capital markets, but really for the economy. Then is there going to be a need for adjustments going forward? Possibly. I think the central banks, Brian, are pretty well equipped to adapt and adjust and monitor any of these excesses triggered by massive accommodative policies.
We just talked about in the intro, 112 billion euros in financing across the BNP Paribas family globally. I mean, we're focused on the United States for the most part, obviously, Jean-Yves. Huge GDP estimates that are here. But the global expansion, is it truly global? Do you feel like, from your perch, the world is set to boom post-pandemic as well? Or really, is it kind of a U.S. and maybe slightly European phenomena?
I think it's pretty clear that the U.S. is leading in terms of economic rebound. I would say here it's a turbocharge economic recovery. As I just mentioned, our economists are expecting a 7% GDP growth for 2021. But I don't think it's unique. You just rightly mentioned Europe. There similar approaches have been taken. Monetary policy, very accommodative, use of the balance sheet, massive. Fiscal policies, Brian, fiscal policies in Europe can be as high as anywhere between 10 to 15% of GDP, which I see a similar trend here. And it's really helping a lot in terms of restarting the economies there.
Okay.
Not to mention that I see a lot of investment in infrastructure, in sustainability, and in digitalization, which, by the way, I believe will be mutually beneficial to both sides of the Atlantic.
Can't let you go without this. You have 14,000 employees in the United States. Many of them work in your gleaming office tower on 7th Avenue and 51st Street in Manhattan, many of whom might be watching right now, Jean-Yves. What can you tell them about their likely return to the office? When will your employees, your traders, your bankers, everybody be coming back to the building in New York City?
And you know this building pretty well, Brian. We've had the pleasure to host you several times on 787 7th Avenue. Listen, in my position as CEO, my absolute priority is the safety of our employees. And today, we're still with only 10% of our staff working on premises, meaning we're still very digital and working from home. Having said that, if the trends you and I just discussed, are confirming and reinforcing themselves, we were really planning on gradually having our employees come back to the office. By the fall, we expect, if things continue to go well, to probably have around 40% of our employees on premises, but under a very different model. The hybrid model is here to stay. You can expect, depending on where staff works, to have employees on premises anywhere between 1 or 2 days a week here, and the rest, working from home. And listen, there is no question we've been very effective, working from home, being digitalized. As you said, the bank has really done very well throughout the pandemic supporting clients. But there is something I really miss. I miss the personal interaction. I wish I was like we always do with you in the same studio, in person. And that's what I miss here. And I really look forward to get back with more personal interaction. It's the best way to be creative, to innovate. Another point I wanted to make, which I think you covered well in your show, Brian, when I think about the junior staff, the staff we hired last year, brilliant, young bankers, they've not been on premises. They haven't met their bosses. They haven't, it's very complicated to convey companies' values digitally. Then I really look forward to the new normal.
Shepard Smith here. Thanks for watching CNBC on YouTube.